of value, and the people with cash are chasing it. It's really. I think what's happened was a couple of years ago when the credit crisis hit, the people with money held on to it because there was a lot of risk and nobody knew what was going to happen. We're sitting here a couple of years later and the world's still operating. We're still here, we're still all alive, the world hasn't ended. So now the money's starting, the real money is starting to chase the value that's appeared in the market. And the M&A activity is just market efficiency.
Keith, and do you think that there are more opportunities for M&A within the small cap sector? Are there companies, according to you, that are looking vulnerable at the moment for takeover potentially?
Well, it's yes. The broad answer is yes. The question is which ones are going to be taken over, and that's where the value lies. But there's also a lot of politics behind that. You know, who's willing to line up those? So the short answer, yes. The long answer is it's going to be hard to call which ones.
So there's no specific ones that you think could be potential targets at the moment?
There would be huge speculation on my part. No, I'd rather not say.
Okay. Keith, other news out this week, we had Chemical Speciality coming out with results. They swung to a full-year losses. They had a slump in demand, and of course a fire gutted one of its factories. But now, speaking of companies that are expanding and going into new things, they had a rights issue for about, I think you said, around 100 million rand. Do you think that shareholders should be following their rights in that? What is your take on this rights offer?
When it came to specs problems, well, first of all, the rights offer is fairly underwritten. I think it was about 25% underwritten by RMB. And then they've also got a lot of major shareholders backing it. The problem for minorities is the rights offer is pegged at 90 cents. But the share is only trading at 80 cents. Now, who would logically follow if you're a minority shareholder and you can buy it for 80 cents in the market? Why would you pay 90 cents for it? And that's part of the problem, is that with the bad results coming out and with the pressure on them, is the share price has fallen below that critical rights offer target. So, well, logically, why follow the rights then?
Doesn't make a lot of sense, does it?
No, and that's of course why you bring in underwriters.
Keith, then is this a company that you are looking at the moment? I mean, at the share price and of course the rights offer price.
Yes. Well, it's, you know, take away the financial stuff and look at the operations. Operationally, it's a good business. They're entering they've got automotive refinish paints, which is their major business. They're expanding into the international market. It sounds like they're getting a reasonably good success in the American market. And bear in mind, if ChemSpec even touches 1% of the paint market, they've their revenues, you know, gone up about 10 times. So limited international success will really flow through. The problem is the financial things. They have to get the liquidity ratios right. They have to sort out the strain in the balance sheet, the working capital. They have to make sure that the new Canelands factory is working. So it's one to keep your eye on. It's going to be a tough call from here, but we'll see.
Keith, so that's obviously a company that you are looking at. Are there any other companies that you're looking at, some stock picks for our viewers?
Stock picks, well, I think West Coal is showing good value at this point. The whole coal industry is such positives coming through there. Another one to bear in mind, possibly off the radar of a lot of people, but is ARB Holdings, share code ARH. They've got a good cash generative business, low debt, good dividends. They've been knocked a bit with the construction pessimism coming through. Another one that's possibly also been knocked with this pessimism in the construction sector is Raubex. What the sector is split up into lots of different sections, and the only guys actually spending, especially in the public sector, are in the roads industry. So Raubex is perfectly positioned to capture that, of course, being a road constructor.
Keith, what is your take on the markets at the moment? Where do you think we are going?
I think it's going to be a very mixed market. We're seeing pockets of value getting taken out. We're seeing rights issues, new listings, which is showing that there's also possibly overpricing the equity on some sides. So my call is really in the short term, we're looking at a very mixed sort of flat market.